little reaction to the trade data that came through yesterday. So let's unpack that first, because overall it's a positive from a GDP differential perspective, as it implies lower imports and relatively robust exports.
Yes, indeed, Alishia, that number did come out positive. It came in at a surplus compared to a deficit the previous month. But I won't really attach too much emphasis on that number. We are seeing that that was possibly a seasonal factor, and we could possibly see deficits coming through for the remainder of this year. Yes, there could possibly be surpluses, again, on a seasonal basis, but we do expect the deficits to come through on the back of the fact that we're seeing slowing global growth, and particularly in the Eurozone, which is one of our main trading partners. We also see Chinese growth also starting to come off, and that could really impact on our trade numbers as well. So it's going to be fairly much of the same that we saw last year.
So very much when it comes to the local unit, we're looking at an oscillating of the local unit within a broad range, very much in line with the broader risk sentiment that's playing itself out in the global arena, right?
Yes, that's correct. Yesterday we did see the rand make strong gains in the morning, but towards the end of the day it really weakened on the back of the fact that, well, not on the back of the fact, but rather in contrast to what the trade data showed. We did see better than expected trade numbers, but that really wasn't enough to temper any kind of declines, and it was possibly exacerbated by the weaker than expected US data that came out. The mood today still seems a bit mixed, and is really focused on what's happening in the Eurozone. The euro does seem pressured at the moment, and the rand also seems to be really taking cue from those developments in the Eurozone.
Of course, we've had PMI data already come through from the East and from China specifically. It came in better than expected. Shireen, what are you made of that number, and just how much encouragement has it offered the markets from a currency perspective?
Well, we did see that number come in slightly better than expected. Markets were expecting the PMI to remain below the 50 benchmark level, so we did expect some rally to come to the fore. We do see that really impacting on our local currency as well, but what is expected going forward is that we could possibly see that number really hover around the 50 benchmark level for some time. Yes, the new sales orders did come in a little bit better than expected, and we could see that continue through as well. But for the local unit, we could see the currency being pressured by data coming out from both the US and the Eurozone today, which could pressure the rand further.
What about data from South Africa itself, because we're anticipating our very own PMI numbers as well?
We're expecting PMI to remain, or rather to be increase slightly above what we did see in the previous month. And what is important is really looking at the components of that data. We do expect the business conditions index to have improved again, but the employment subcomponent index is expected to pressure the number going forward. But we generally do expect a positive number coming out, so that could possibly provide some lift to the local unit.